Whether you trade futures or options, the 5 minute opening range break or orb strategy that I use every single day applies to either, and both will make you money. If you have the right indicators set up within TradingView, it should be very clear to you the direction the market is moving that day, unless it's just one of those days that's an anomaly. But 9 out of 10, these indicators will tell you exactly what the market is doing. And this isn't anything incredibly special. It's literally having an indicator mark out the 5 minute orb high and low and then seeing what the chart does. I'm not some technical analyst who watches charts all day long, and I can only do this because I know what this means and that means. I'm literally looking for two things. I'm looking for a breakout. Is it going bullish above or bearish below? And is there a fair value gap that was never reclaimed? So in this video, it breaks out bearish, and every chart that we look at, NQ, ES, SPY, and QQQ, all leave behind a bearish fair value gap that was never filled and never reclaimed. So liquidity is sitting there, which means there wasn't enough buyers to come back in and take that liquidity. So I knew it was going to continue bearish, and all four of them did. And they do the same thing every single time that fair value gap never gets reclaimed. So this is NQ from yesterday, November 3rd. And this zone right here is actually my key levels indicator. So this on the 5 minute opening range is the high, and this is the low. So let's go ahead and label that. So you have the orb high and the orb low, opening range breakout, high and low on a 5 minute chart. Right here, you can see 5 minutes after market open, this immediately drops, boom, and it creates a fair value gap. This is liquidity that's left hanging out because between this candle right here, this wick, and this top wick, there was nothing in between there. This gap was never filled. So when I do the opening range breakout strategy, this is exactly what I look for. I look for a clear break low or high with a fair value gap to let me know that this move was big and it never reclaimed, and it's most likely going to continue. Not all the time, but I'm going to go as far to say 8 out of 10 times it follows this trend. So let's say this. Let's just assume this is obviously still on the 5 minute chart right up here. We wouldn't have got in at the top wick and we wouldn't have got in at the bottom. Let's just split the difference and say we got in right at the middle. So we'll put our short position right here. And let's say we want to make sure that we're not going to pop back up and touch the bottom opening range low. And so we're going to target 55 points on our stop loss, and we're going to put 110 down here on our take profit. We're going to be targeting a 1 to 2 risk to reward. We just want double our money. Now, we have the fair value gap that presented itself. This then went down below, bearish again below that, and nothing in these 10 minutes reclaimed any area of this zone. So let's see how this would have played out. Still down, still going. We're going to pop around just a minute right here. We're going to tread, and then at this point, we're out. It hit. So we went into the trade at 9:40, and at 10:25, 45 minutes later, if that, a little over 30 minutes, we would have ticked out. It wouldn't have taken the full 5 minutes on this. It would have dropped right here, and we would have made one of the cleanest and easiest 1 to 2 risk to rewards on NQ using the 5 minute orb with a fair value gap confirmation for a bearish breakout. So now NQ and ES, so I flipped over to ES, they tend to follow the same path. If NQ is going down, ES is going down. If ES is going up, NQ is going up. And they kind of mirror each other. But a lot of people like trading ES. That's what I trade. They like it because they say it's more predictable. The movements you can figure out a little bit better. And in this exact same scenario, we pretty much have the exact same chart. So whether you're looking at NQ or you're looking at ES, we again have the same fair value gap. We have the 5 minute opening range break high and low. We have the same gap that never reclaimed right here. So again, let's just look as an example. Let's say we split the difference and we got in right here at the middle. We're going to run this up all the way to our opening range break low, 12.25. And then this is going to be 25 as our 1 to 2 risk to reward. You'll be able to see here that despite whatever chart we're looking at, they both hit. So right here, this chops around just like NQ did, and a little bit after, right there it is. Same exact time frame, same everything. So you had two opportunities on two different charts to notice this. If you were watching NQ or if you were watching ES, you would have again turned $500 into 1,000, and 10:25 Eastern time isn't even 7:25 for me on the West Coast. My kids are just waking up at that point for school. Now, this again is not, I do futures, I don't do options, but I've had a couple of people ask about options. If you were in TradingView and you had these indicators set up, you would see that SPY and QQQ followed NQ and ES today. They're all one. It's just whether are you doing futures or are you doing options? Which one are you doing? And then here you see, boom, big candle, fair value gap that never filled, and it continued bearish. If you were looking at the charts today, you would have went puts. You would not have been doing calls today based on this chart. You would have put puts down here. You could have looked really aggressive somewhere down in the 680s. You can see now it's reclaimed, but if you're just flipping 0 DTE puts, then you would have been able to make some money. If you bought in somewhere around here at the 683 price point and you bought the 680 put, if you would have been able to time the bottom, you would have been pretty heavy in the money. Same exact thing, just to show you QQQ. You should not have been doing calls today. The opening range break indicates down, fair value gap never filled, just like everything else we've looked at. I know they're all correlated, but I'm just more telling you, if you have the indicators on and you're looking at the charts, it's very clear what's going to happen today. Big break, fair value gap never got filled or reclaimed, boom. So again, if we take the same middle point off this one, that's at 633. You could have ran a 630 put today, cashed out just a little bit later, made some money on 0 DTE expirations, and you would have been in the money if you just are looking at the charts. So with all of that being said, get in TradingView, set up your indicators, and just watch it. If you just watch what's happening and you look for very specific things like my strategy, opening range breakout, highs, lows, and wait for a fair value gap. If that fair value gap presents itself and it doesn't reclaim, I know it's most likely staying bearish or it's going bullish, and I make my plays accordingly. Get your indicators set up and look at the charts.